Okay, I'll show you how I do the poor man's covered call on Robinhood. So I'm gonna trade Robinhood itself. So the ticker symbol is Hood here. Let's find that. So I already have that one. So I'll go trade. So at first you want to go buy a very long dated contract. It doesn't have to be that far out, but that's the one I have, at least a year or more. That would be called a leaps. So you gotta buy a call. So I got this one right here right now. So what you do, you buy it, you know, I already have that one, so I don't have to do that. This is just an example. I'm showing you what I did to get into this one. Then you go back and you find another shorter dated one to sell a call against it. So the one I have right now is the November 14th, and then you go sell. Then you sell one against it, and let's see there it is. There's the one that I sold against mine. So you click on sell, and then this is the premium that you would be collecting, so max profit. So if it won't reach that price, the strike price of 138, you would collect the max profit of $825. So, and usually if it does reach that price, I usually just like to close out the whole position, usually at a profit, you know, if it reaches the price, you know, target. But you know, that's actually what I do with that one. But that's the poor man's covered call, and I already have it here. I'm gonna show you here where it's at over here. So it is right here. This is the call buy that I have, and it's obviously in general in the profit. So this is the buy call, and let's see, this is the sell call that I have. So because this one's a tiny bit down because the Robinhood stock went up, but in general as a whole, this option is up. So as long as it keeps on going up, it's fine. But if it's gonna reach the price target of the sell call that I have, I would have to get out of it, you know, just to kind of be safe and just close the whole thing out at a profit. For example, right here, if Robinhood would reach 138, I would just have to close out the whole position. So at first I would have to buy this one back, and then I would have to go back to this one, and then I would just have to sell this at a profit, whatever it's sitting at, type deal. So that's what I would have to do with this. So right now I'm in it, and in general I'm up. Over here it says total return 168, so it's not too bad for now. But I'll go back to the other one. This whole thing is called a poor man's covered call. So I'll go back to this one. So if the price doesn't reach 138 by November 14th over here, so I would collect this whole premium of $853 by that day. So that's pretty much it, the poor man's covered call.